how are trend lines made? Now, trend lines are generally made by connecting. Hi everyone, this is Nooresh Merani. So the first topic we have is how to use trend lines. So before we get to trend lines, we need to understand what are trends. Like we have looked in previous videos and otherwise also from the standard terminologies, everyone knows it's an uptrend, it's a downtrend and a sideways trend. But a trend is never unidirectional. There are pauses in between, there are pullbacks, there are retracements, and this is how a trend develops. It's not just a single line. So what happens is during multiple trends, when you are seeing higher highs and higher lows, traders use trend lines to determine the trends and the direction of the trend and how strong the trend is. So this is where we go into using trend lines to identify trends and also see a change of trend. So how does a trader make a trend line? So tries to join multiple bottoms or multiple tops and tries to find a start of a trend and then a termination of a trend. So once the trend changes, you start making a new trend line which could be towards the next trend. So this is where we'll look into further in terms of trend lines and how do we use it. But trend lines is an interesting tool which is used to find exact entry points as well as exit points. Importance of trend lines. Now, trend lines can be used for identification of the trend as well as a confirmation of the trend. Now, the next point is, what does a trend line generally signify? Just because there's a trend going up and down, you're putting trend lines, but in the end, it is showing the psychology of the market. What is the bullish outlook? What is the bearish outlook? If the prices keep bouncing off from the same trend line, it indicates there is a bullish trend. In the same way on the downside, every pullback tends to reverse back from the upper end of the trend line. That tells you the trend and the psychology of the market right now is down. Now, a lot of time there will be reactions from the trend lines. This will allow a trader to do multiple things. So the first thing is to understand what is the trend, whether it is very optimistic or pessimistic if it's a downtrend. Then trend lines can also be used as a stop loss. So for example, in an uptrend, you've put a trend line which has at least 3-4 bottoms on it. So what do? You're buying the supports and keeping a stop loss below the trend line. So it will help you put a stop loss as well. In the same way, if you think this is a trend which is about to end, the break of a trend line will confirm the trend has changed from up to sideways or down. Now, trend lines can be used on different time frames. It can be used on even hourly charts, but specifically more better used on daily, weekly and monthly time frames. This will give you quite a few entry points, as well as in terms of an entry point where you're buying at the lower end of the support zone or the selling at the upper end of the resistance area. And more importantly, a break of a trend line gives you an entry into a fresh new trend. So how are trend lines made? Now, trend lines are generally made by connecting swing bottoms or swing tops. It is not a random line going anywhere. So you generally take the swing bottoms and swing tops. Say for example, if you look at the high for the Nifty is 18,800 for the last 1 year, that becomes a swing top. Very simple way to put it. Same way, 16,800 is the recent bottom, that becomes a bottom. So that is the kind of bottom we are talking about. Now, a trend line is made by using 2 or more touch points. So you join one bottom to the other and then extend it towards the right. Ideally, more the touch points on the trend line, more important is that trend line. So there can be multiple bottoms on the same trend line. So ideally 3 or more gives you a conviction that this trend line is important. The second part is when you are making those trend lines, the flatter the better is a very simple rule. So if you are making very steep sloping trend lines, they do not really give you the best indications. So as much as flatter, the better. So there are 2 simple rules. More the touch points, better. Flatter, the better. Now, how do we look at trend line trading strategies? So there are 2 ways which you generally focus on trend lines in. One is to play a breakout strategy. The second is to look at a bounce strategy or a pullback. Now, the first one is, consider you've made a trend line which has multiple touch points. It's relatively less sloping, not very steeply sloping. Consider there are 3-4 touch points like you see out here. When the stock or the index price crosses the trend line, that is what is called a breakout. The breakout will be as important dependent on as many touch points are there, as longer the time frame as well. So when you are trading the breakout strategy, you are buying a stock or index when it crosses that trend line. The other strategy is to use trend lines as a zone of either support or resistance. So consider you've created a trend line which is in an uptrending market. So every time if you notice the stock or the index tries to bounce back from the same areas. So once you see the stock or the index touching that touch point and reversing, you're initiating a buy position with a stop loss just below the recent swing lows. Now this is where you're trying to play the strategy. You're playing a bounce back to the upper end of the trend or the upper end of the channel, or as you'll see as per the pattern. But these are the two main strategies. The breakout one is very interesting because generally it signifies a change of trend, and that is where a lot of moves come in a very quick manner. Trend lines are the base of all technical analysis chart patterns. So if you look at any of the chart patterns, whether it is a triangle, so it has two lines coming into friction at one point. Then if you look at a channel, it has two trend lines on the upper end and on the downward end. Then if you look at another pattern like a head and shoulders, right? There is a neckline which touches multiple bottoms. You have a flag, there are two trend lines. So essentially, even if you look at a cup and handle pattern, it has a trend line right at the top joining multiple tops. So trend lines form the base of technical analysis chart patterns. Once you make trend lines, it tends to point to clear entry points exactly. Now let us look at some examples of trend lines on the charts itself. So the chart in front of you right now is a chart for Nifty from 2020 to 2021 roughly. Now if you notice, after the bottom in March 2020, we were in a good uptrend from that 7500 Nifty point. We kept on making higher tops and higher bottoms. And if you notice out here, there are roughly 7 touch points where the markets have bounced back from the trend lines. It's only in the end, by end of 2020 or roughly in 2021, we saw a breakdown, the 7th attempt. Now that is where it signifies that finally the uptrend is broken. Now, once an uptrend is broken on the trend line, it does not mean it will turn down to a V. There are possibilities it could go into a sideways trend or take a pause and then maybe start another new trend, or also take a stiff downtrend. But a break of such an upward trend line tells you the momentum is gone from the index or the stock. So this was 2020, 2021. And if you notice, this was the period of time where Nifty topped out, and over the next 1 year, we went into a sideways phase, if you notice. So such a trend line break will allow you to make a better strategy in terms of your trading and investment. Now look at another example. This is the trend line in 2012. There are 4 touch points, and then finally on the 5th attempt it breaks. And then again the markets go into a sideways period for the next few months. Now we look at an example of a trend line where a trend line breakout gives you an indication of a new uptrend. So we saw a couple of examples of a downtrend coming in. Now this is a chart for Nifty right from 2010-11 to 2014. Now if you notice, right from the highs of 2010 to the highs in 2013, 2014, every time the markets would come into that band, it would face a lot of resistance. Finally, in the middle of 2014, it took a breakout move. Now this was a clear entry case wherein a new bull market has possibly started. So this was an indication purely on trend lines, and you could keep it very simple. Now let us take a very similar example. After that bull market in 2014 to 2015, we got a nice uptrend. And if you were to try and put a trend line even in this move in 2014 to 15, you will see a trend line break. And then we got into a downward channel. Now this is the example of a downward trend line which is in front of you between 2015 to 2016. Every time the markets made a pullback, it would keep getting resisted at this trend line. And this was a downtrend. The markets corrected good 20-25% from the top. Finally in 2016, start of it, it gave a breakout above this trend line. That signified now the downtrend is over. We'll get into an uptrend or a sideways trend. After that breakout, if we see, the markets went back to the same highs of 2015, took a little dip. Finally, when you put another trend line, you see a nice cup and handle breakout. And if you notice on that third touch point, there is some bit of time which is spent around that area before the breakout takes place. Again, such a trend line breakout, what does it signify? A start of a new bull trend. And that we saw in 2017, a nice clean bull trend, again higher tops and higher bottoms if you notice. Now, another example in front of you. Now, this is something on a little shorter term time frame when you are looking at chart patterns. Now, this is a trend line example of 2009. After the big fall in 2008, the markets got into a sideways consolidation. You will see 3 bottoms on the downward side, another 3 to 4 attempts on the upward side. Finally, that consolidation period got over, and the trend line allows you to confirm that the trend has now finally reverted back. So you had the downtrend, then a sideways consolidation. This trend line breakout tells you finally the downtrend is over and we could be starting a new uptrend. So whenever we are looking at such breakouts on trend lines, it gives you superb entry points to a start of a new trend, and which is very important, because if you get the start right, you can ride the whole trend. Now, some certain stock examples. Now, this is an example of a company, for Phenolics Industries. The stock has been facing resistance around the same trend line. You could call it a falling triangle or a descending triangle. Somebody would call it a channel. But the trend line makes it very clear, because in all the chart patterns, what are you looking out for? Whatever be the name of the pattern, what do you want is an entry point after a breakout. So if you are able to make better trend lines, you don't even need to focus as much deeply into the chart patterns if your trend lines are correct. So this is an example of Phenolics Industries. Take another example of a sideways consolidation. This is Sona Comstar. If you see, there are 4 to 5 times the stock got resisted at the same area and now is trying to break out. So this is how you make trend lines and create positioning wherein you wait for the trend line breakout so that you can buy it on the breakout and a good entry point. And then we'll further see how to use stop losses after such entry points. Another example in front of you is a stock chart for East India Hotels. Now out here also, if you look at the trend line, which is the downward sloping trend line, if you see right from the start, 1, 2, 3, 4, 5, 6, 7 touch points. So every time the stock tried to bounce back, it would get resisted on the trend line. Once the trend line breaks, you could see a sharp turn. So in this case, this is just a chart a couple of weeks back. The stock was 165. The trend line broke out. The stock went to 190 in the next few sessions. So what happens is, you wait patiently, you've made your trend line, you wait for the prices to confirm the change of trend, and then you get into that trade. Now, to sum it up in terms of trend lines, before we sum it up, a word of caution. What are the mistakes one makes in making trend lines? So the first mistake is drawing trend lines incorrectly. Now, like I said, it is 2 or more touch points, and the touch points have to be swing bottoms or swing tops. You cannot be making it randomly. So focusing on the low of that day, of that swing low or the swing high. So the low or the high of the day is the better way. And also what happens is, sometimes there could be a little discrepancy in terms of exact bottoms. You can tweak it a little, but not majorly. Then failing to adjust trend lines. Now once a trend is broken, right, then there is a different trend line, a different set of tops and bottoms are made. So once a trend line is broken in a meaningful way, you have to adjust it, make a new trend line according to the trend. Now, the last and the final thing is trading against the trend. So if you're trading against the trend, say if you're seeing a trend line breakout, you don't play for it, say the stock will bounce back and pull back a little. You trade with the side of confirmation. So if it has broken out, you stick with the breakout. So now to sum up the whole topic, 3-4 things to remember. More the touch points on the trend line, better it is. Flatter the trend line, better it is. Third, focus on the breakout trading strategies which work better. It gives you the start of the trend. And finally, it can also be used for buying on dips or selling on rise with the trend. So that is the way we look at it in terms of trend lines.